So please welcome our moderator, NIKOLA PAVESIC. He is the head of partnerships at Nikkei. We've also prepared a video to introduce our panelists, so fix your eyes to the screen and please give them a round of applause to welcome them up on stage.
Welcome. Welcome, everyone. It's before lunch, so I think people are getting hungry and heading to the food area. But we have another regulatory topic here, and this is exciting. Who here is excited about regulation? We have 1, 2, 3. Wow. Pat, 4. Thank you.
Loyal regulator crowd.
And then plus 4 of us, so that's 8. So we're talking about regulatory journey towards compliance, and then I have a pretty good panel with me here. We had a lot of discussions backstage, but maybe it's the best if we start introducing ourselves. By the way, my name is Nick. I'm based in Tokyo. This is my first BlockShow, and I'm very happy to be here, but let's start with George maybe on that side.
Sure. My name is George ZARYA. I'm a founder and CEO of BEQUANT. We are based in London and Malta. We focus on institutional clients. We offer crypto exchange, custody, and launching a prime brokerage service. So we very much embedded into the regulatory frameworks and developments, since that's what we do, the institutional space.
Thank you. Yep.
Hello, I'm NAKAGAWA from Monex Group. We run a network of online brokerage business, as well as we run crypto exchanges in Japan and the US. It's CoinCheck in Japan and TradeStation in the US, which would launch within the next few days. As you know, Japan has been somewhat of the leader in crypto regulation, so I think I may be able to provide some interesting insights for the audience today.
Thank you. Yeah. TIANWEI.
Hello everyone, my name is TIANWEI. I'm the co-founder and CEO of Xfers. So Xfers is a fintech platform that's providing open banking platform for digital business to provide like financial services into Southeast Asia at a much faster pace. So from a regulatory point of view, we just became, at the start of this year, the first non-government fintech in Singapore to acquire the widely accepted stock value facility license by the Monetary Authority of Singapore. So we have been operating for the last 5 years on the ground, and we have some regulatory insights that allow us to do what we do. And actually, it's the start of this week itself, we just announced that we'll be launching our first stablecoin initiative tailor-made for Southeast Asia. So happy to share more about what we know and how to operate in this market.
Awesome. Thank you for the intros. So maybe a quick round of questions. I want to know, maybe personally or from the perspectives of your business and your jurisdictions, what do you see and what is for you the role of the regulator in respect to your business? Who wants to take this first one?
I'll take that. Well, as I mentioned, in the institutional space, regulation is absolutely paramount. So when we started the business, we started basically by doing a lot of research on where cryptos are regulated. So about a year and a half ago, that was basically 2 jurisdictions. It was Gibraltar, it was Malta, and there's something happening in Switzerland as well. As time went by, we've seen a bit more progress and more clarity, and more countries actually speaking out about how and what to do in this space. So it's from our perspective, yeah, it's the one thing that the big checkbox that is absolutely necessary to bring in the business.
But their role is, the primary role of the regulator, from your perspective, would be to facilitate your business or to protect consumers in that?
Well, it's much more boring than that, to be honest. It's just to it's the regulated asset manager and the hedge funds. The compliance officer typically what they want to do is they typically go by the book, and they need to protect the business from any regulatory risks. So essentially, when you're looking at an unregulated space, you look at the regulatory risk. Regulator is a potential risk to the business because you can get fined if you're doing something wrong, if you don't know something, and so on and so forth. So it's that kind of a thing that you just have to have, and less so about trying to innovate or do other things and grow your business. It's cover your ass basically.
Cool. Yo, you can wear multiple hats probably on that question, but what would be your opinion on the role of the regulator?
Yes, so the role of a regulator is not to promote innovation. So if anybody expects them
Controversial.
to...
Sorry.
I mean, seriously, I mean, if you expect them to promote innovation, it is really out of their scope. It has to be done at a different level. But for the role of regulators, particularly when you are involved with retail customers, they would be very focused on protecting consumers or retail investors. So whatever they do, it is not about giving for example, providing like a sandbox environment for business to innovate, but to provide a framework that would force businesses to comply and provide a safe environment for investors to trade or invest. Now, there's the other aspect of regulation is that it adds legitimacy to a business. And this, in an indirect way, is a very important, or it's a very supportive aspect of regulation, in the sense that once you're recognized as a proper business, banks would deal with you, and that has been a very big catalyst in Japan in terms of promoting crypto trading for retail, because all the crypto exchanges in Japan have bank on-ramps, fiat on-ramps. So you're a legitimate business, everyone does business with you. The second aspect, which hasn't really happened in Japan yet, because this will come into effect April of next year, is that they would classify crypto derivatives as a financial instrument. This would allow institutional investors to finally allow them to consider dealing in crypto derivatives, right? So I think as much as it is focused as to protect consumers, it would also add legitimacy to businesses, whether you're on the service provider side or whether you're on the consumer side.
Thank you. TIANWEI, maybe, I mean, you have local experience, but generally, from your perspective, the role of the regulator.
Yeah, I think I second what you say here, right? From our experience so far, at least from MAS and the regulators that we deal with the most here, consumer protection is the heart of all the regulation that rise here, right? If you just look at the recent PSA Act that's been passed in the Parliament early this year itself, they clearly outlined the 4 key objectives. And I think the key 2 part of the objective is 1, consumer protection. The other one is related to the technology risk that, again, will be impacting the consumer again, right? The next 2 part is more towards like interoperability of the technology so that it can promote for more. They don't want silos whereby everyone is building their own ecosystem where it's walled garden. And the last part is related to AML. So the key part here, again, is always back to protecting the retail customers that we have to be dealing with, because most of the customers out there might not be as sophisticated as the audience that we have over here. And if something doesn't go well for them, they will be finding the regulators to blame, right? And that's not the kind of environment that they want to be in.
Thank you. A small digression to what basically Yo said, and George, you are regulated out of Malta, and that's where you're based, right? Some of the
in the process of getting
right. So in some of these ecosystems or jurisdictions have maybe different reputations than the other ones. How do you handle that situation? Because in Japan, you said it's very important to be regulated. It gives you legitimacy. Do you have issue? Would you prefer to be a regulator in some other jurisdiction if possible?
To be very honest, yes. Well, yeah, when we speak about the reputation of different regulators, it's very important, very important. In the institutional world especially, when you're, well, we're based in London, right? So we've been waiting for regulation to happen in UK for quite a while, but the Brexit, it has been just overwhelming. So we were not very hopeful that anything will come into place actually anytime soon. But we were wrong actually. They came up with some frameworks where FCA will regulate parts of the activities of the participants like custodians and service providers from next year. But regardless of that, I mean, Malta has been an interesting journey for us because they have a pretty robust framework. It's very much in line with what the MiFID is, which is basically regulating traditional finance participants like asset managers, multilateral trading facilities, the MTFs or analogs of the exchanges, and brokers and so on. So it's for us, we were looking at the, I mean, you can go to Estonia, for example, right, which is, it's not really a regulation. You just buying yourself some sort of a permission thing. But when somebody says, I'm regulated in Estonia, it's like, well, do you know what regulation is? You know, we deliberately looked at the actual insides of the regulation. How do regulators approach it? I mean, what kind of, are they open to dialogue with the participants? Because we're pioneers in the space, right? There are no templates. So when the regulator looks at it and they say, okay, we're going to apply MiFID regulation to it, you cannot do that. I mean, so there's a lot of gray areas still, and we want to be part of the forming of that regulation as well. And both Malta and UK are very accommodating and open to dialogue with the market participants, and that's exactly what we're doing.
I hope the government of Estonia is not sponsoring this event. So it's like, but let's go a little bit more. That's a good actually segue to the next one, talking about different jurisdictions, right? Let's go more into, again, you come from very different places, like from Singapore and Japan. I mean, you're also active in other Southeast Asian countries, and Japan, and then Europe, but basically Malta and UK. How different are the approaches from the regulator in this very different jurisdictions, but maybe not so different, perhaps? Maybe we can start with the local, with the home field advantage here, with the MAS.
Sure. I think Singapore government and of course the MAS is already one of the most forward-looking that we have in the region, right? And they have been super open to innovation. They've been trying to promote it, which is a bit contradictory with what I just say here. But actually, over our last 5 years of working with them, you realize that they have always been very cautious about regulating something. And one of the key part of the thing that we got from all our conversation with them is that they're very afraid about regulating something because it might send the wrong signal to the market about being endorsing a certain solution itself. So if you look at Singapore per se, right, it's actually one of the most interesting things, right? First, very well structured, laws and regulation. You realize that you can actually do a lot of things without having to get a full license, right? They just do not have a hard requirement that you need to have to become a licensed entity, right?
Like Estonia? Or?
Yeah, I don't know. I don't speak for other jurisdictions. So like in Singapore, if you bring it back to our context, right, we were the first fintech, the first non-government to actually get a widely accepted stock value facility. There's only 5. And if you look at the other 4 of them, they are all government-related entities, right? eNets, EasyLink, Nets, FlashPays, right? Because they don't see there's a point in giving out a license. And they're very, very cautious about the fact that when they give out a license, does it mean they are endorsing a certain solution and might send the wrong signal to the market that, hey, guys, it's okay to do this right now. So they take a very cautionary approach, but at the same time, they will let you know very clearly these are some of the guidelines that you can do without having to get a full licenses, right?
Interesting point. Maybe Japan is a very good use case, especially from your perspective with a little bit of background with CoinCheck perhaps and where you are right now.
Right. So I think Japan, in terms of how the regulatory scheme unfolded, was was a bit interesting in a sense that the regulators were really forced into regulating the crypto space because, I mean, even before the CoinChecks and the Bitflyers of Tokyo was there, Mt. Gox was in Japan, right? So whether you like it or not, Japan was like the crypto trading center. And we had contrary to the image of the average Japanese, the Japanese love trading, right? So, you know, people say, oh, Japanese don't love taking risk. I think it's the corporate level that people don't want to take risk. But at the individual level, for example, like Japan has the biggest, it continues to be the biggest retail FX market. The leverage is 25 times, which is probably one of the lowest in the world, but still, the volume is one of the largest. I think at peak, we were like 60 to 70% of the market. We're now maybe 40, 50, but still, we're very large. And so crypto trading picked up very quickly in Japan. Retail was very involved. So the regulators had to scramble to properly regulate this because it was run by maybe some not so good people. There were a lot of rumors about how Bitcoin was used in terms of, you know, accessing the dark web and using it for, illicit activities. So I think the regulators acted very swiftly from a Japanese standard to regulate this. Now, what's interesting is that they regulated it as a means of payment in Japan to implement AML and KYC. But they also realized that over the last few years, particularly through 2016 and 2017, that no one was using Bitcoin for payments really, right? They were using it for, you know, primarily for trading or speculating reasons. So the Japanese regulators quickly amended the regulation, and they will now split crypto as a means of payment under one act, the Cash Settlements Act, and the trading aspect under the Securities Act or the Financial Instruments Act come April. So I think Japan has, the regulators, at least in Japan, has very quickly adopted to the reality of the market. And I frankly think that they're doing a pretty good job in providing a safety network. And as well, even though it's not their main objective, they're trying to facilitate the growth of this very nascent industry or technology.
If you would have to give a vote to the Japanese regulator, the FSA, at the beginning of the regulatory process, on a scale from 1 to 5, what would it be?
Initially, I think it kind of started from on their scorecard on the FATF inspection that they were not doing enough for the last 2 inspections, and they had to really do something. And you know, Bitcoin came up, and they said, "Oh man, you know, we have to regulate this as well." So it wasn't really a forward-looking regulation. So I think at an outset it was probably 2 or 3.
Oh, that's good. It's better than I expected.
Right. No, I think because we think regulation is good because we've seen what it did for FX markets in Japan, that it actually helped grow the market more than kind of like kill the market. So we know that, and I think given what they're doing now to split the trading aspect and payments aspect of crypto, I think they're probably closer to 3 or 4 in terms of how they're dealing with an industry now.
Significant improvement by the FSA. George, you mentioned Malta before and why you picked there, so maybe, but we can look more into, Malta is for people, it's far away from here. Malta is part of the EU, like the UK is still. When do you think the EU would, and then how does it affect you, the EU would find like a common market solution to this?
Well, we are very much concerned about what's going to happen after Brexit, but we are hopeful that the Europe and UK will maintain relationship and passporting rules across the jurisdictions. As far as the crypto concern, I know for a fact that the regulators in Europe are actively discussing a sort of a harmonized directive, Europe-wide directive. And I was on the panel with the French regulator in Malta at one of the conferences, and before they actually published some regulation, which happened actually March this year. I know BaFin is looking to regulate this space in Germany. Well, I mean, other countries will join, but I mean, basically, the two leading powers, Germany and France, will absolutely have the big say in terms of the harmonized regulation across Europe. And UK is, again, it's still one of the dominant financial centers. It has certain views and opinions, and I think it will stay important for the Europe-wide kind of regulatory framework. So yeah, I mean, Maltese have been pioneering, so a lot of things that they've done already will be adopted in the future. So that's what we hope, is that by being regulated, Malta will allow us to passport eventually into the Europe-wide once the regulation comes into place.
So we're going to go to your concrete examples, maybe your concrete interactions with respective regulators. And since we're also full of praise of regulators and regulation here, perhaps if you can think of a bad example or a situation can be handled better where you had to interact. It seems to me from what you're saying that your interaction with regulators was very different based on where you are and what you're doing. And then, of course, different jurisdictions have very different approaches, as we said. Can you think of something, of some interaction that you didn't agree with, or anyone?
Well, I wouldn't say we have strong disagreements. It's more about coming to my comment about trying to put templates on the existing business model, because the technology of blockchain provides us such flexibility of building business models that never existed before. I mean, looking at operating an exchange, which is a broker, which is a custodian, which is pretty much everything, right, for your client. These kind of equivalents don't exactly exist in the financial market. So we're looking at the clearing and settlement infrastructure. We're looking at the multiple different areas of how do we do the prime brokerage space. I mean, how do we treat different, sub-asset class, so the derivatives, for example, right? So there's a lot of questions to be answered by the regulator, and the one thing is that the regulators haven't figured out is basically the answers to those very precise business model related questions. But it takes time to sort of through a dialogue and working out a solution. So it's not sort of a dead end kind of problem. It's been figured out at some point. So we're very hopeful we can fix it.
TIANWEI, Yo, any experiences?
So when we acquired CoinCheck in April of 2018.
Sorry, just everyone knows what happened to CoinCheck, right?
So CoinCheck was one of the largest crypto exchanges in Japan. But CoinCheck was hacked in April of 2018 to the magnitude of $500 million of the NEM token. Now, amazingly, CoinCheck was able to pay back pretty much everything to the investors who got affected. But I think it also triggered the kind of like the crypto winter as well for that year. But anyways, so they were able to pay back $500 million, or maybe slightly below that. But that kind of like triggered a very stiff reaction. The whole event triggered a very stiff reaction by the regulators, but also it gave us the opportunity to acquire CoinCheck because there was a strong preference, or I think at least the regulators felt that the existing crypto exchanges were not speaking the same language with the regulators. So I wouldn't quite say that regulators would like the exchanges to jump when they say jump and duck when they say duck, but I think they wanted to have at least a civilized or a conversation based on regulation, which the interpretation, if you're coming from the financial industry, the interpretation of a regulation is pretty in sync with the regulators. So in April, when we acquired them, we kind of believed that the regulators required somebody who understood financial regulations to acquire the business. Now, it was good for us because we were able to acquire CoinCheck, but I think it would also make the community or industry less diverse, right? So I'm not saying that we should have bad players, but I think we should have a lot more diversity in who in providing customers or the best services to the retail investors. I mean, today, I mean, I don't know, maybe in 5 years or in a few years' time, it may be all run by large brokers or banks. And again, it kind of like kills a bit of the innovation aspect from a diversity point of view. So I think if there's anything that the regulators I wish they would do is to consider giving a little bit more flexibility in terms of having new entrants, diverse players in the market.
Once burned, twice shy, maybe. But is the regulator treating you as CoinCheck now under special scrutiny because of it? I know you acquired CoinCheck and clearly changed hands, but is it still under a special kind of focus by the regulator just because of its name and what happened?
Yes, I think it's hard to ask people to forget what happened, but we have been, in that sense, very proactive with the regulators in terms of working together with them to implement a much safer framework, environment for our customers. We've been very proactive in terms of how industry should really work, and we've been investing a lot in terms of both communication with the regulators as well as what we implement in our business.
Can I add one more point? Is I mean, the recent development across the sort of the space, which is called the travel rule. That's a significant regulatory initiative that puts a lot of burden on the industry, like massively. I mean, there's one problem is that it's industry wide. So what a regulator wants is basically to have all the participants in the market just come together and adopt some sort of a solution to exchange the KYC data of the clients who transfer their funds between the exchanges, to be able to track where the funds are going. I think that's one of the examples where it's a bit of an overkill, to be honest. At this point in time, we are not that harmonized as an industry yet to be able to kind of like group together and come up with something like that.
I see. That's a good, if any regulators in the room, as a matter of fact, I see them, that's probably good advice. TIANWEI, maybe some examples from here. Singapore is one of the most definitely advanced, not just crypto, overall financial ecosystems, I would say, dare to say, in the world, and most proactive. What is your experience and maybe some not so good examples?
Well, I can share a bit about our experiences operating in both Singapore and Indonesia. So Xfers has been
even better.
Yeah, Xfers has been pretty fortunate that we have been expanding aggressively across Southeast Asia itself, and Indonesia has been a major market for our growth for the last 2 years itself. But I think we all know about the good stuff, so we can continue saying all the good praises about Singapore, how things are more innovative. But I think overall, I follow what you guys were saying. Basically, it's a long-term conversation that we should be having with the regulators. But one of the key insights that maybe we can share here is that when we talk about Southeast Asia, we're talking about 10 different countries, right? They're really not just one country. And the regulators behave quite differently in different countries.
Same in Europe, very much.
Yeah, so
the recommendations are treated individually by each country.
Yeah, and Singapore and Indonesia can be on 2 different spectrums completely. Like due to the CoinCheck incident, I think the Singapore side have been pretty okay with this incident. They were just giving you regulatory advisors, and they're not going to make any quick changes in their regulation. But on the Indonesia side, you realize that they started to make very quick knee-jerk reaction, right? I think one of the rules I was just sharing backstage then is that I think they started to enforce that the payout capital requirement for exchange in Indonesia is going to be 1 trillion rupiah. And that's about $70 million US. But if you put that in context, it's really interesting because the commodity exchange in Indonesia, the standard non-blockchain ones, the payout capital is only $7 million US, right? So they suddenly slap on a 10x requirement for the crypto guys. Of course, this
Just in case.
just in case, right? Because they want to make sure the consumers are protected and stuff, and that causes turbulence in the market, and the players have a lot of uncertainties. They do not know how to operate. You do not know whether your business will be a legitimate one within the next 6 months. However, luckily enough, I think, like I mentioned along, it's more of a conversation. After a long chat over 6 months, they did manage to adjust that down again. So from our experiences, you really need to invest quite a bit in actually constantly, proactively talking to the regulators, which is what we actually did, right? So for Xfers side, when we launched our stablecoin initiative, we have a very long, prolonged conversation with MAS throughout the whole process. And they will be advising you about, hey, what are the things they are concerned about, what are the standards they should be seeing. They will bring on their experiences from regulating banking institutions and try to let you know that these are the expectations they have. But when you try to do that on the Indonesian market or the new market itself, the regulators might just have a completely different opinion. And that itself requires upfront investments, and you have to do it much earlier. Yeah.
So a vote for MAS right now for regulating crypto?
I want to take side. I think
that's a 3.
Both of these regulators have, like I say, the rule number 1 for regulators is always consumer protection, right? So they always bring back to how educated their market is as well, right? We are talking about 2 different markets. In Singapore, typically the audience are much more savvy. They understand what kind of risks they're involved compared to Indonesia, where we are talking about a much bigger demographic of population that might not be as well educated. That regulators will take a much more cautionary approach, right?
Times 50, yeah. Indonesia vote for the regulator from your perspective as a business, or overall handling the regulation of the whole?
If it's a score of 5, same thing. I think it's around a 3. A lot more things can be improved. Yeah.
Malta?
Hard to say because we're just in the very early stages.
5, then 5.
I think it's around 2, 3. Yeah.
So topic of this panel as well is obviously regulation, as you all noticed, hopefully by far. I just want to remind you, you can ask questions on Slido. I don't know if we have the hashtag somewhere here, but throughout the session, and we can have them at the end. We still have a few minutes left. I only see some non-moderated questions right now. The thing is talking about innovation and disruption. So, maybe you were the strongest in saying the primary role is consumer protection, not innovation. Yesterday, a high-ranking MAS official said that MAS is doing a lot of software development. They're almost like a software development company more than just a regulator. So clearly, there is parts of the regulator, again, depending on jurisdiction, where you can maybe not support, but just ensure or make infrastructure so that innovation thrives. You don't have to be. How does the regulator achieve that? So let's forget for a moment, if possible, the consumer protection part. What we agree all is the primary and maybe only function of the regulator. How do we ensure a thriving ecosystem like Malta is trying to do, like Singapore is surely trying to do? I mean, what Japan is trying to do as well. Who wants to take first?
Well, I'll be very brief. Basically, the regulators have a established sort of way on how to encourage innovation, the sandbox environments, right? So UK FCA has done a lot of initiatives within the sandbox. There is the rounds and rounds and rounds, and as far as fintech, it's a never-ending kind of use cases and the technology and the businesses. And they've been extremely open to innovation. And with the Maltese, they didn't have the sandbox as far as I know, but they have allowed for transitory period for businesses to get established, to sort out their business model, and then come into sort of a more stricter rules in terms of operating in accordance with the written law. So, in a nutshell, both of these ways are workable, but the sandbox in the long term, I think that's a perfect example how regulators make things very efficient for new businesses to strive.
Yeah, maybe.
I think what we would expect from regulators is clarity on regulation. I think that if the companies are so innovative, I don't see why it's so difficult to figure out how to work within the regulatory rules. And if there's a rule and it's clear and and that's why clarity really means a lot. I mean, if it's
But
clear.
if it's not clear, you come and ask, right?
Yes, I mean, you can have a dialogue, right? But I think that if there's clarity on what you could do, and that's what maybe the Japanese regulators are not really good at. They kind of like, they have to read the body sign and body language, and you kind of have to make a second guess, and you make the wrong read, and even though you make the right read at that point, when the boss changes, then things would change. So there's a bit of that, but if there's clarity, I think it's not that difficult. It's a very simple business decision whether you want to invest in the infrastructure to comply with the regulation and do business. So I think clarity is the utmost important thing from the regulators.
To ensure also innovation and
Yes,
everything,
I mean,
not just the
as I
profession
mentioned
part.
earlier, once it's regulated properly, there will be business that can be built upon it, right? So it's a legitimate business. I mean, institutional investors will come in Japan, hopefully. So yes.
And everywhere else, we're kind of that way.
I think it's the same thing here. Again, second what you just say, I think clarity is the key part here. At least from a cultural perspective, you're right, like Singapore versus Indonesia, at least the market that we operate in, is quite drastic, right? In Singapore, I think we trump at being clear about most of the regulation side of things. If you actually see what some of the things that the MAS actually does is to public circulars about what kind of initial coin offering you can do, case study of each of the different use cases. Like for example, I think the one that Xfers is actually working on, which is the stablecoin initiative, was pretty much like exactly an excerpt of what is the possibility that can be done by offering a coin that's backed to a currency like Sing dollars itself. They will tell you what kind of regulation you have to fall under, what kind of licenses you have to obtain, and if your coin offering is of a certain different offering, they have like A to Z in terms of number of different case study, and that helps a lot of young startups that might not have enough resources to research on that, get clarity about what are the things they can do. And even though we have a sandbox environment, a lot of time that sandbox is not really required because they already put it clearly that, hey, this is almost an exhaustive list of things that you can do. Unless you really, really fall under something that doesn't really fit their requirement, then you go into the sandbox itself.
Just a quick one. The unification across multiple regulators is also important. So if we're talking about banking and the crypto, right? So you can have the best business
Within
model
one
in crypto.
jurisdiction.
Yeah, but the banking is still. I mean, the banking industry is completely uncooperative. So what do you end up basically you're taking your money offshore to some payment institution, taking unnecessary risks. So these kind of unclarities and
Is this part of
doesn't
the
help.
regulators' job? They have to
Absolutely.
go to the banking sector.
They should, yeah, absolutely. I mean, when we talking to the banks in UK, is absolutely a no-go, But I mean, if the regulator themselves want to facilitate innovation, they should explain the risks and banking community to facilitate the growth, just like they did with the Open API initiative and so on.
One quick question. Your different roles in different jurisdictions as we came to, what percentage of your personal time do you spend on compliance and interaction with regulation? I assume you would be more than the others, but maybe I'm wrong.
Oh, yes.
What is your percentage, your personal
Well,
time?
because we were in the process of preparing for application and going through the regulation, it's been taking, well, closely to a quarter of my time to do this. But if I compare this to when I was running a regulated brokerage firm, that was back in the day, it was closer to 60%. So just gives you the ballpark.
Can be worse.
Much worse.
Yeah, TIANWEI?
Well, from an expert's perspective, we are a regulated entity in Singapore itself now. And we're fortunate enough that the government have been and MAS have been pretty open about what can be done within the regulation space itself. And we have a team that is dedicated to working with the regulators to make sure that we are adhered to all the requirement of them. from a personal time perspective, I do spend about 20% of my time on the compliance side of things, because now we are dealing with two countries, because both Singapore and Indonesia have a different set of regulations. For Singapore side, I would say it's more of an easier process because we have an established team that is able to deal with all the concerns they have from an AML point of view, and there are known industrial standards that we can adhere to. On the Indonesia side of things, I think you need to spend time with your local partners, finding the right banking partners to work with.
The time spent tenfold, like the capital requirements? Or?
I would say actually no, not really the case, because in Indonesia, one of the key things that we did right from earlier on is we found a right banking partner, right? We work with banks on Pronoun on the ground, which they already have 10 years or more of established experience working with the regulators, and we try to work our system around them and have them represent us in a lot of this conversation they have with the regulators, which significantly saved my time. Which brings back to the point, right? I think that's what Xfers actually do as a business itself. We're here to enable fintechs and other digital business to enter the market faster. So if you having problems with the regulators, maybe you can have a chat with us. You can see how can we help you with our platform to get to the market, test it out, and see whether it actually works for you.
I'm at the holding company, so I don't actually do...
Hopefully less.
Yeah, I mean, I don't spend a lot of time actually working on compliance things, but of the time I spend thinking about crypto businesses, I would say 20-25% of my time is used to understand what the regulatory environment is in the jurisdictions that we operate, Japan and the US, and the implications on our businesses in each jurisdictions.
So is that too much, 25%? Should it be less?
No,
Okay.
I think being compliant is at the end of the day is good for users, so it's worth the time.
We have one quick question from the audience, so let's just quickly go through that. I think it should be yes or no because they're going to pull us off the stage right now. If traditional banks fail to comply with FATF regulations and rules, should they be run out of business as some cryptocurrency exchanges do if they don't comply?
If you don't comply, yeah, oh, absolutely, you got to be out.
I think that's a yes.
Okay.
Yeah.
That's one audience. I think we are really out of time now. They will take us off the stage. Thank you so much. That's very, very insightful. Our panelists will be around. Some of them fly this afternoon, but you can still catch them for a few questions. Thank you so much. I wish I wore a T-shirt like TIANWEI. Is blue your favorite color?
Blue is our corporate color. Blue is our corporate color.
Okay, so let's all wear T-shirts next time.
All right.
Thank you so much.
A round of applause for our panelists. Thank you so much.